I'm just going to start off a little bit of background on Bitcoin and how it was originally produced and how it's produced right now. In 2008, Satoshi Nakamoto, who we don't know exactly who it is, he created Bitcoin in light of the 2007 and 2009 recession that rocked the markets as an asset that was not associated with banks or a central banking system. And that was the start of Bitcoin's history. Bitcoin right now is mined through supercomputers who have algorithms that they use to solve a block, and a block takes roughly 10 minutes to solve, and you get 6.25 Bitcoin if you solve that block, and that is how Bitcoin is put into circulation. The miners will mine for it, and then they'll get the reward, and they'll either hold it in hopes that the price goes up, or they'll sell it right away to the market or exchanges. And the difficulty of solving these usually goes up over time. So you need like more and more supercomputer power to keep doing it. So that's why a lot of normal people don't do it, because there's a lot of electricity cost to be able to mine for Bitcoin, and it's really not that profitable unless you have a lot of computer power, and you have a lot of just overall resources that a lot of people don't have. And a lot of people like Bitcoin because it's the deflationary asset. We can see over time, Bitcoin's inflation over time started out in roughly 2009, 2010 as 100% inflation, and as we got closer to a Bitcoin halving, the inflation goes down and down and down and down over time. And a Bitcoin halving means that those miners that mine for Bitcoin in this using a supercomputer get half of their reward every 4 years that they used to have. So from this period all the way to the first halving, they got 25 Bitcoin for every block that they solved. And then from in this period, they got 12.5. They got 12.5 Bitcoin, and then it just keeps getting halved and keeps getting less and less, halved and halved every 4 years. And this halving usually will cause a huge price maturation, because when there's less supply in an asset and there's greater demand, or the same amount of demand, a price has to increase to just make sense. And yeah, that's just kind of a little bit of background on Bitcoin's history and how it gets put into existence. And this is the chart of Bitcoin right now. You saw a huge run after the halving in May of 2020, which makes sense because in previous cycles the huge price action has come a couple months, and then it usually lasts a couple months after the halving, and then it usually lasts like a year, or like around a year, give or take a couple of weeks, and then it peaks, and then it usually has an 80% decline right here, 80% decline in the next year, 80% decline in 2014, 80% decline in 2018. So you really want to be in this market from the halving until about a year after the halving, or you could start to scale a little bit before that. And so we can see that in the charts of Bitcoin in the past year. We had the Black Swan event in March with the coronavirus, huge drop that left Bitcoin at like $4,000 in March, and then we just got huge price gains throughout the rest of the year in 2020, along with traditional markets. But Bitcoin even got more of that because of the fact that it went through the halving in May of this year, around this time. So we saw the huge maturation here. So I just want to go back to the time frame here. We went up here, and then we kind of went to a descending triangle pattern, and we since have pumped out of it due to a lot of reasons, but number one reason is probably this right here. Elon Musk putting Bitcoin in his Twitter bio, which caused a natural pump of the price, which probably shouldn't have happened if it weren't for him. But we can see that kind of declined because it really wasn't like a natural force that did it, natural price action, but it did hit the previous resistance here and use it. It's using it as support, just as new support. So I think that in the short term to medium term, Bitcoin should have enough juice in it to break this $42,000 peak on January 8th, maybe in the next month or two. Maybe a little bit sooner than that. It just depends on how much people want to buy Bitcoin at that certain point. And yeah, this 30% decline that it had recently, some people that are new to the space probably don't like Bitcoin because of price declines like that happen, but that's very normal price action in a cryptocurrency bull market that has happened previously in 2017, which was the best year for Bitcoin in the past 5 years. We saw like mid-June to mid-July in 2017, we saw a 38% decline. And then we saw a couple other between 20 and 40% declines on the way up to almost $20,000 in December 2017. And so this is very normal price action for Bitcoin. It's just there's a lot of volatility associated with the asset. So like a 30 to 40% decline in Bitcoin is probably the equivalent to 5 to 10% decline in Apple, which is pretty normal for a stock like that to do during a bull run. But as you can see, when this 40% decline happens, 30 to 40% decline, there's always huge price action gains after this. So I think that because we've gotten our 31% decline recently, there should be some good price movements upwards. I'm not ruling out that we could go a little bit lower than that $28,000 in the near term. But it did break out of the ascending triangle, so we'll see what happens with that. I'm just going to go through a little bit of altcoins and Dogecoin now. So we can see that the overall market cap of cryptocurrency as a whole is 1.01 trillion. And we can see that Bitcoin's dominance is 62.7% of that. So its market cap of being 632 billion is roughly 63% of the overall cryptocurrency market. And we can see that the top 3 altcoins are Ethereum, XRP, and Polkadot. And you can get into these if you want to be a little bit more risky because they go up more than Bitcoin, but they also can crash harder than Bitcoin because they have less market cap and they're just like not as mature as Bitcoin is. And then Wall Street Bets has put Dogecoin into the limelight recently, going from like half a cent to it went to like 8 cents on Thursday night. And it's like almost 3 cents. So that's just like a lot of people probably took their profits, and well, I'm sure Wall Street Bets will try to pump it again, and it probably will happen because a lot of people like the fact that it's like a joke currency. They think it's funny to like buy it, get into it, but I wouldn't really recommend it just because of this circulating supply, 128 billion. When you have an asset that has that amount, just compared to Bitcoin, which circulating supply right now is 18.6 billion. 18.6 million Bitcoin. So that's like way too much circulating supply. That's the reason why it's like not even 3 cents, because the circulating supply is just way too much for its current demand. And I don't really recommend getting into this, but if you want to be risky, we saw that on Thursday that it had an 800% increase in one day. So stuff like that could happen. But I just like institutional investors and investors as a whole, really, when they think of crypto, this is the first thing they think of, and this is the one that they want. So I don't really think that any of the altcoins are worth getting in for the long haul. That's just my personal opinion, because I don't think that companies or central banks in the future will want anything besides the most established cryptocurrency, which is Bitcoin. And we already have seen companies like MicroStrategy, where its CEO, Michael Saylor, and starting to incorporate Bitcoin into his balance sheet of his company. So I think that Bitcoin is the number one asset that you want to have for cryptocurrency, for stuff like that. And we can go back to Musk having Bitcoin in his Twitter bio again. So there seems to be talks between MicroStrategy and Tesla. Or MicroStrategy is starting to in that stock, it's really had a huge price increase based on putting Bitcoin in its balance sheet. So a lot of companies are probably thinking that they should get into it. So Musk putting Bitcoin in his Twitter bio is like raising questions for experts if Tesla is going to be like the first major mainstream company to incorporate Bitcoin into its balance sheet, which would be a huge get for Bitcoin, because it's, in its terms of mainstream adoption, it's still like viewed as an alternate asset, because its market cap is so much less than the market cap of gold or like Apple or something like that. So it's really not as mature of an asset as it could be at this point. So it could have some adoption from good companies like Tesla and stuff like that. I'm just going to go through to end the video a little bit of price predictions for the last little bit of the year. I think that Bitcoin should be able to get to $100,000 to $200,000 this year, because of the fact that in the previous years, in 2013, it peaked at $1,100, and then that was a year after the halving, and then a year after the halving in 2017, it peaked at $20,000. So where I get my price targets are, this is roughly a 20 times increase of price within a 4-year period. So I think that it wouldn't be out of the question for Bitcoin to do 10x from this one, which would put it at $20,000, somewhere in this $200,000, somewhere in this time frame as we get closer to 2022. This makes sense because as Bitcoin gets older, it's going to be a more mature asset, which would probably lead to less volatile price swings. So it makes sense that it would do roughly half of the price increase it had between its previous 2 years, between its previous 2 cycles. And this stock to flow model incorporates the halvings right here. This is a halving right here. So you can see a huge, it's like prediction for Bitcoin price goes up a lot right after the halvings, because the supply of it goes way down while the demand for it is still there, or even increases, because people have seen this price action before, so they buy it, which causes the price action. Kind of a catch-22 situation here, but it happens throughout its history. The same has happened twice, and based on the price action that we already had this year, I think that is very likely to top out again. this is like predicting roughly $100,000 Bitcoin at the end of the year, but I think I can overdo this because in 2017 it was only predicting like $5,000 Bitcoin when it went to 20,000. So it makes sense for it to be like predicting roughly 100,000 and then it going to 200,000. Yeah, it's just a little bit of thoughts I had and a little bit of background, a little bit of everything about Bitcoin and cryptocurrency as a whole. Hope you liked the video.